our perception of risk and our perception of sovereign risk in particular is clouded by this extraordinary amount of purchases from the central banks. It is a game changer, definitely. I think that what we have seen in the past in terms of quantitative easing was that central banks purchased a significant amount of the net issuance. We did see the Federal Reserve, the Bank of England, and the European Central Bank purchasing a significant amount of the sovereign bonds that were issued, but not all of them. And I think that one of the differences in 2020 was that what we saw was that for the first time in a very long period of time, there was absolutely no impact from the secondary market in the price of bonds, because all of those issuances were purchased by the central bank. It was not just the case of the Bank of England, it was also the case in the European Central Bank. And I think that we should be worried. Why? Because when we see gilts or the bonds of European sovereign issuers, we think that there's very little risk because the yield at which those bonds are trading is very low, and usually a low yield tends to be a reflection of low risk. However, this is not the case this time, because the reason why yields are so low is only because the central bank is purchasing it all. So what we need to be understanding is that our perception of risk and our perception of sovereign risk in particular is clouded by this extraordinary amount of purchases from the central banks. In the previous crisis, for example, what we saw was that the Bank of England would purchase 60% of net issuances. And that basically allowed some form of analysis of what is the real demand of the market, or of those bonds, that there was real secondary market demand. This is not the case right now. So our perception of risk and of sovereign risk is probably clouded by this extraordinary level of purchases. Gold and silver rise because they are the response to this aggressive monetary policy that we're seeing all around the world. Then the higher that central banks take their balance sheets, it is more evident that gold or silver, as units of real money that have history and centuries of experience being real money, come back and at least help many citizens all over the world to preserve a little bit of their purchasing power, of their savings and their real wages. Bitcoin, like all cryptocurrencies, is an extremely volatile asset. And as currency, they're not yet currency, they're not yet money. Now, silver, gold have a history of centuries of being used as money. In the case of Bitcoin, it is not yet fulfilling the three principles that we would assume are valid to consider something money, which is to be a reserve of value, unit of measure, and more importantly, a generalized mean of payment that is widely accepted. Bitcoin might not be worth anything else than what other people think that it's worth, but that is the case with almost any currency. What is the peso or the Brazilian real or the US dollar or the euro worth, other than what the next person that is going to make a transaction in those currencies believes it is worth, no? But the point that I think is more important about Bitcoin and cryptocurrencies is that they are a response to this massive increase in money supply and very aggressive monetary policy that we see from central banks. So they're not yet currency, but they're startup currency. And I think that as such is something that's very, very interesting to watch as an economist, and very interesting to see how they develop. And more importantly, it's very interesting to see that so many years after they said that they would disappear, they're still there. In our view at Tressis, what we believe is that markets will continue to be supported by this extraordinary central bank action, but that we need to be extremely aware that it's because of financial repression of the big jump in monetary policy actions, no? And therefore, what we need to do is to be at least prudent, not taking aggressive bets on the more cyclical side of the economy or on sovereign bonds because of what I mentioned before. The three long-term themes that we at Tressis follow more closely are the aging of the population in developed economies, hence the importance of healthcare and defense as well. The second one is the absolute massive revolution in technology, and we like to be on the engineering and artificial intelligence side of technology, and also everything that has to do with sustainability, particularly electric vehicles and renewable energy.